Welcome back to the Smart Money Stack, the podcast where we break down the week in crypto, finance, and technology so you can stay one step ahead. I'm your host, Ramiz Ali. Over the past week, we've seen major shifts in stablecoin regulations, new moves from Tether, coordinated efforts between the US and UK, and as always, Elon Musk finding a way to shake market sentiment. By the end of this episode, you'll understand how those stories connect, what they mean for markets, and why stablecoins may be the most important part of crypto to watch right now. Regulations taking center stage. The biggest storyline this week is regulation. After years of uncertainty, governments are finally laying down rules for stablecoins. And the UK and US are no longer moving separately, they're starting to align. UK Chancellor Rachel Reeves recently met with US Treasury Secretary Scott Bessent alongside leaders from Coinbase, Circle, Ripple, and major banks. The goal? Harmonizing stablecoin regulation across the Atlantic. What does this mean? Because right now, crypto companies are stuck in a messy patchwork of laws. Aligning framework means less friction, easier cross border activity, and a clearer path for institutional investment. But there's a twist. While the UK wants alignment, its own central bank, the Bank of England, has proposed caps on how much stablecoin individuals and businesses can hold. Think about that, a cap of 10,000 to 20,000 pounds for people, 10 million pounds for businesses. Industry groups are pushing back hard, arguing that this would choke innovation and drive firms to friendlier jurisdictions. The debate is just beginning, but the message is clear. The UK is trying to balance innovation with control, while the US is racing ahead with firmer guardrails. The US leads with the Genius Act. In the US, the Genius Act is already reshaping the stablecoin landscape. The law requires stablecoins to be backed by liquid, low-risk assets like dollars or treasury bills. It also mandates monthly public disclosures of reserves. This is a big shift. For years, critics argued that stablecoins operate in the shadows with unclear reserves and risky practices. Genius forces sunlight into the system. Transparency, liquidity, and regulation are no longer optional. And companies are responding. Case in point, Tether. Long criticized for its opaque reserves, Tether just announced a new US-based stablecoin, USAT. It will be issued through Anchorage Digital Bank, a federally regulated trust bank, and will to comply directly with Genius requirements. This tells us something important. The stablecoin race is moving into the regulated world. Companies know that if they want to serve US customers, they need compliance, transparent products. Elon Musk meme coins and market noise. Of course, no week in crypto is complete without Elon Musk making waves. This time, Musk purchased roughly $1 billion worth of Tesla stock through a revocable trust. On the surface, this had nothing to do with crypto. But Musk's actions, whether tweets, share buys, or comments on X, ripple through markets. And here is the kicker. The first Dogecoin ETF, ticker Doge, launched this week. Yes, Dogecoin, the meme coin born as a joke, now has a regulated investment vehicle. It's another sign that crypto's wildest corners are inching into the mainstream. Put the pieces together. Musk brand power, Dogecoin's ETF, and rising meme coin legitimacy. Suddenly, sentiment becomes a tradable asset in its own right. But with legitimacy comes risk. Volatility could spike even higher, and regulators may not stay hands off forever. Market moves. Let's zoom out to the broader market. Bitcoin climbed above 116,000, regaining momentum after weeks of choppy trading. Solana, BNB, and Dogecoin posted new highs, riding both fundamentals and hype. But beneath the surface, venture funds for new crypto projects is slowing. Liquidity is concentrating in established coins, leaving early-stage innovation under pressure. The message? Big players are consolidating. Investors are flocking to what feels safe: Bitcoin, Ethereum, large caps, and now compliant stablecoins. Why stablecoins are the story? Here is the through line. Stablecoins are no longer just a crypto sideshow. They're becoming the backbone of the digital finance system. In the US, Genius brings clarity and structure. In the UK, regulators are weighing innovation versus risk. Companies like Tether are creating new compliant products. Cross-border regulatory alignment is finally on the table. And remember, stablecoins aren't just for traders moving between exchanges. They're poised to power real-time payments, tokenized assets, and even international remittances. In other words, programmable finance at scale. Risk and open questions. But let's not get ahead of ourselves. There are big risks still unresolved. Overregulation in the UK. If caps are too strict, companies could flee to friendlier markets. Compliance costs. Smaller issuers may not survive the expenses of audit and reserve disclosures. Trust gaps. Will users embrace new compliant stablecoins like USAT or stick to legacy options like USDT? Competition with CBDCs. As central banks experiment with digital currencies, how will private stablecoins fit in? These are trillion-dollar questions, and the answer will shape not just crypto, but the entire future of money. What to watch next? Looking ahead, keep your eye on the UK's final decision on stablecoin caps, adoptions of USAT and how markets react to its first disclosures, any new ETF approvals, especially altcoin or meme coin funds, macro drivers, Fed rate decisions, inflation numbers, and liquidity flows. Because remember, crypto doesn't live in a vacuum. Policy and macro conditions shape the rails just as much as code does. That's it for the week's episode of the Smart Money Stack. If you take away one thing, it's this: stablecoins are entering their most important chapter yet. Regulation is here, compliance is mandatory, and the firms that adapt fastest will define the next decade of digital finance. Thanks for listening. If you find this episode valuable, share it with a colleague, tag me on LinkedIn, or drop me a note about what topics you'd like covered next. Until next time, stay informed, stay smart, and stack your smart money.